heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde is off. This is Bloomberg Technology. Coming up, from AI to antitrust and geopolitics, we'll get the full read on the tech sector with Dany of Janus Henderson. Plus, we'll hone in on some corporate news as Alibaba calls off its planned IPO of Cainiao, which could have raised more than $1 billion. And we get the read from inside the C-suite. Later this hour, we'll be joined by Marissa and by Dany Garcia, the powerhouse behind Dwayne The Rock Johnson. But first, we want to bring you some important updates on the search and rescue mission underway in Baltimore after the Francis Scott Key Bridge collapsed early this morning when a cargo ship struck the major transportation route. This is a live feed of the Patapsco River and the wreckage from that crash. Right now, search and rescue is the primary focus in Baltimore. There are also major implications for global trade, as the Port of Baltimore is the largest handler of U.S. imports and exports of cars and light trucks. The FAA has currently restricted drone flights near to the bridge. U.S. Homeland Security Secretary Alejandro Mayorkas said in a post on X that the Coast Guard is on the scene to assist local partners and is, quote, actively involved in the search and rescue mission. We're expecting to hear from President Biden later today, and we'll continue to bring you updates on the situation in Baltimore throughout this hour. Okay, sticking with what's happening in markets, this is the NASDAQ 100, up 0.3%. Remember, we're coming off the best week of the year so far last week, the tech sector playing a role in that. We're going to have a conversation about Nvidia, softer by 0.5 percentage point, but when you're a $2 trillion market cap company, you pay attention to that. Yields creeping a little bit higher, 4.26% on the US 10-year, and Bitcoin is staying above $70,000 per token. There was that big move just before the show, actually, 24 hours ago, higher towards $70,000 per token. That markets picture is kind of a wait and see moment because of all the Fed speak that's due to come in the coming weeks. Let's get back to Baltimore and stick with the collapse of Baltimore's Key Bridge. You're looking at some of the automotive names because, as we have stressed, that port, while small in the context of US ports, is the biggest handler of import-export for car and light trucks. In the last hour, we spoke to the CFO of Ford and got his real-time reaction to the broader implications of what's happening. Have a listen.
It's a large port with a lot of flow through it, so it's going to have an impact. It's just at this point, we'll have to understand what that means for us specifically. We'll work on the workarounds. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit.
It's a developing situation. Ford CFO talking about having to divert parts to other ports on the East Coast. How serious is this? What is the impact to the economy and supply chains? So let's bring in Dany portfolio manager of the global technology and innovation team over at Janus Henderson Investors. And Dany, while we have you here, you wake up to news like this as a money manager. How do you feel about it?
Well, it's a tragedy, of course, and you just hope that the people that are unaccounted for are brought back safely, hopefully. But from an economic standpoint, it's too early to tell. It's nothing like we faced during COVID when we had severe shortages of components throughout the entire automotive supply chain. We can get the parts here through other ports. It just might take a little more time and it might be a little more expensive. But that's how I would think about it, but not a material impact to the tech ecosystem anyway.
Well, quite. I mean, I remember so many days spent at the Port of Los Angeles, literally days and weeks down there. Part of that story was inflation. Mm-hmm. Right now, we're trying to tie together what's happening in the economy with the tech sector. How closely are you waiting on the Fed, and how nervous are you each day, Dany? I know you're not a very nervous person about inflation and what the Fed's when the Fed's going to pull the trigger.
Yeah, I think what's happened with inflation is it's come down a lot. There's still some sticky elements to it, and maybe we don't get as many cuts from the Fed as we thought we might towards the end of last year. But nonetheless, I think the direction of travel is that the Fed will start to ease at some point. It's just that pace of easing might not be as aggressive as one might have expected a couple months ago. But that's good for stimulating the economy.
Dany, we're here to talk about technology, and I think we cannot do that without speaking about Nvidia. It's an important name for you and your fund. We're soft to 0.6% right now. There's a brilliant story on the Bloomberg. Nvidia traders find reasons to worry beyond sky-high stock price. I know that the gain in the price is something you have reacted to and you consider, but the logic outlined in the story is that a lot of the potential gains from Nvidia, the feel-good, it's been brought forward and happened in a very condensed space of time. Just give me your thesis on Nvidia right now.
Yeah, absolutely. So if we actually look back to last year, it was something similar. Most of the gains from the stock actually came in the first half of the year, and particularly Q2 after it really became known just how big of a supply-demand imbalance that we had for GPUs. You could argue this year maybe the same thing has happened. I mean, the stock's put on $1 trillion in market cap since the beginning of the year. It's pretty much unprecedented. But what's important about it, and I think this is what makes it hard from an investor standpoint, and that is the reason the stock's gone up so much is because earnings have gone up so much. If we go back 18 months ago, I think the street thought Nvidia might earn somewhere around $5 a share this year, and that's probably going to be closer to $25. So the stock, actually, if you look at the earnings multiple on 2025, it's actually still quite reasonable. Now, we can argue what might happen as supply-demand comes into balance, but nonetheless, the demand profile out there remains unprecedented, and the valuation remains reasonable.
We're showing some animation of Blackwell.
Yep.
How big a moment was Blackwell for you?
Yeah, it's actually a big moment because it's a continuation of how Nvidia has been innovating over the last several years. And importantly, a couple things. It really focuses on price performance and power consumption, which are two big issues for GPUs. I mean, it doesn't get as much attention, but power is probably the single biggest constraint to deploying inference across the global economy because of just the inability to get enough power into these data centers. And then you have to cool them as well. And, there's a lot that comes along with that. But the other thing is, Blackwell is going to be less expensive than the H100. And so that also shows you NVIDIA's confidence that the visibility that they have into demand, that they can actually start lowering the price despite there effectively being no elasticity
so
in the
that's
market.
my final question on NVIDIA. I was in the room for 90 minutes with Jensen, and he basically said, starting this year, the data center business is $250 billion per annum, but he was talking about growth rates of 20 to 25%. What's still not clear to me is like the tipping point from where the majority of that is training to inference, because I don't think NVIDIA's talked as much about inference. AMD came out really hard with the inference story. Just how much did you buy, I guess, the soft guidance that he was giving?
Yeah, it seems reasonable. And actually on their last call, if I remember correctly, they actually talked about inference now has crossed over half of workloads relative to training. Now, AMD needs to talk about inference because NVIDIA's pretty much won the training market. And so the next prize out there is inference. And inference is going to be multiples of the market opportunity that training is, because this is how you deploy it. It's like developing something and then putting it into production. That's what's going on with AI workloads right now. And so that should continue to be a really healthy tailwind for the ecosystem as a whole.
The other story or data point I was watching overnight is China's iPhone shipments fell 33% in February. It's a name that you have a smaller position in. But it's really interesting. I mean, let's just focus on corporate Apple and China. Is that a data point that worries you?
Well, it's not surprising. And it's not surprising because over the last year, you've seen China actually retaliate somewhat to the restrictions that we've placed on them for all of our most valuable intellectual property as it relates to the semiconductor ecosystem.
Right. There was the reporting this week from Bloomberg that the Chinese government was basically trying to get any server designs that power government compute to use domestic semis going forward.
Yes.
But sorry to interrupt.
No, but that's exactly right. And so what they're doing is they're trying to find ways where they can actually exert some power and some market influence. And that's really tough for Apple because they're saying no state-owned enterprises. They're starting to extend that. So it's incremental demand loss in one of the most important markets for Apple globally. Now, India is starting to take the baton, grow faster. It's a large market. They don't have the purchasing power that actually you have in China, not nearly as mature, but that should help out. But nonetheless, China's a tough market for Apple, and they're inextricably tied to China because of the supply chain as well. And so you can't even replicate their supply chain.
And
globally.
we point out Apple's only down 0.1% on that news of the point. This last week's been fascinating. We have been talking about Apple a lot on the show in the context of antitrust. DOJ suit, but also what came out of Europe with the DMA probe. And for the first time, I'm thinking back to last Thursday, the stock falling 4% on a DOJ suit, investors seem to be saying, wow, there is actually a real antitrust problem or risk to the stock here. Is that a concern you share?
Yeah, for a couple reasons. And it's not just the suit that the DOJ brought against Apple. I know the stock reacted to that, or the digital market case in Europe. But it's also the Google TAC case on search. Google pays somewhere between $20 and $25 billion a year to Apple. That is 100% gross profit that drops to the bottom line. So it's no surprise they actually potentially are doing a deal with
gets a lot of praise on his bottom line management as well. So it's a pressure point.
Yeah, exactly. So I think you got to look at it from both angles. It could, that could be bad for Apple. It could actually be good for Google because Google doesn't have to pay as much TAC for that placement on the iPhone. But for the first time, what you're seeing is the DOJ go after and say, look, it's all right to have a monopoly. It's not all right to exercise abusive power with that monopoly, and that's really what the government's saying. The thing that's interesting about it, though, is as a consumer, you actually opt into that monopoly if you buy an iPhone. And so in some ways, you could argue Apple's case on that side of the ledger is actually pretty strong versus compare that to the Google case where it's default on an Android device and then they're forcing you in to the Google Play Store. That doesn't seem as valid as what Apple should be able to do, given what it's provided to consumers and the benefit that they get.
I think what we've talked about is the idea that whether it's the suits or the regulatory action, they want Apple to basically signpost to consumers. You can go elsewhere if you want outside the ecosystem. Dany Fish of Janus Henderson, you are able to discuss so many corners of this technology market. We love having you on the program. Now, coming up on Bloomberg Technology, Alibaba pulls its planned IPO for its logistics arm. We're going to bring you those details next. Pretty flat, though, on the US ADRs of Alibaba. This is Bloomberg Technology. Alibaba is calling off an initial public offering for its Cainiao logistics arm, which had been a much anticipated debut that could have raised more than $1 billion. For more, let's bring in Bloomberg's Isabel Lee out of New York. The big question is why they've pulled the IPO.
Why? It's really just because of poor market conditions. As the stock waned, the company lost interest. As we know, the Hong Kong and Chinese stock markets aren't doing so well. But we have no indication for now that they will list elsewhere. But this also doesn't mean, Ed, that Alibaba won't be reviving this IPO soon. So they filed for paperwork in September, and Tuesday marked the end of that 6-month period in which they had to update it. And so they said, nope, we're pulling out. But instead, they're going to buy out all the remaining stock held by employees and investors for $3.75 billion. So that's instead what they're doing. And of course, we have Alibaba chairman Joseph Tsai saying that, this is an appropriate time to double down on Alibaba's investment in Cainiao. So for now, they have around a 64% stake, and soon after that, it will be 100%.
There's been some inconsistency on what is or what is not happening with the spinning off of various listings. Cainiao is important, right, as the logistics arm. Market conditions are one thing, but how surprising is a kind of U-turn on a decision for a major financial transaction?
I think it's surprising, but not that surprising, because this isn't the first high-profile IPO that Alibaba nixed. They also, in 2023, halted their $11 billion IPO of their cloud arm, and they also halted the IPO of their grocery unit, which is Freshippo. So this is going to be the third that we know of, or that we're talking about. And it's really interesting because remember last year, everyone made a big deal about the historic shakeup of Alibaba in its 25-year history. Suddenly, the company came out and said, you know what, we're going to break up into 6 baby Babas, as Tim Kalpan of Bloomberg Opinion said. But we haven't seen any of that. We have Bloomberg Intelligence saying that instead of seeing this play out, we're seeing a retraction. And we don't know how this will play out in the future. A lot of people were looking to this as a blueprint because Alibaba is often seen as a barometer of the Chinese economy, being one of the biggest companies in China. So they were like, we'll see if this will work out. But for now, no signs yet.
Bloomberg's Isabel Lee, thank you very much. Okay, sticking with corporate news. WeWork co-founder Adam Neumann and financing partners submitted an offer to buy the bankrupt company for more than $500 million, according to a representative for his real estate company. Bloomberg's Max Chafkin joins me with the details. Adam Neumann and a consortium are trying to buy bankrupt WeWork for $500 million US. Explain.
Yeah, I mean, Adam Neumann, of course, former CEO of WeWork, left the company after taking it to kind of dizzying heights, a valuation that was, thought to be, close to 50 billion at one point. Now, of course, the company is bankrupt. Adam Neumann, very good salesperson, has a lot of respect from at least some investors in Silicon Valley who are willing to sort of look past, some of the missteps with WeWork. He also just clearly, loves this company, right? I mean, he was very invested in this spiritual idea of WeWork, and we live. There's all this additional stuff. So now it's like he's saying, we back.
We back. Max Chafkin, my goodness. When WeWork filed for bankruptcy, it did so with $19 billion of liabilities. And I think that there are probably many questions, many more than answers right now. But do we have a sense of how Adam Neumann is going to finance this, his plan for WeWork version 2.0, 3.0, 4.0, whatever the version it is that we're at now?
Okay, well, I mean, I think there are basically two options. One is, the core of WeWork's business was pretty straightforward, right? Finding offices, signing leases, and then dividing them up and reselling them. Now, part of what happened here is that they expanded too quickly. They raised huge amounts of money from SoftBank. Adam Neumann was like a master of hype and sort of got ahead of his skis. There's a version of this, right, where you use the bankruptcy proceeding to renegotiate these leases, to get the costs, back in control, and you have a smaller but sensible business. The other option, which I have to think is a possibility given who we're talking about, is, restart the hype train. Adam Neumann started this other company, Flow, with backing from Andreessen Horowitz. They've said, they still believe in him. They think he's, a great entrepreneur. So you could imagine some sort of effort to sort of do this thing all over again after, one expects renegotiating, trying to get the costs under control.
Bloomberg's Max Chafkin on Adam Neumann's $500 million bid to buy back WeWork, We Back. Autonomous drone delivery company DroneUp is rethinking last mile delivery. The startup's unveiled what it calls ecosystem, integrating ground, air, and software products into a single platform. Joining me now with more is DroneUp CEO Tom Walker. And, I think where I want to start, Tom, is why go beyond just being a drone company? Why did you need to make a system and a technology that says, here is the all-encompassing last mile drone package?
Well, thank you for having me. I mean, long, leaders have insisted, industry leaders, that drones are the answer to the last mile problem, but we really haven't attacked it correctly. We've tried to fix it with simply using drones, which is like a transportation company trying to fix a last mile logistics problem by getting a better truck. In order to be able to lower costs, you have to decrease labor. You have to provide a way that retailers can get the product onto the drones quickly and efficiently, and also be able to deliver to those 100 million plus Americans who don't live in single-family homes and don't have yards or porches to deliver to.
We're showing video of how the system works, right? You load your package into the ground unit, the drone lands, the package is raised up and attached to the drone, and off you go. It seems simple. Who's actually going to be using this, Tom? Do you have any signed up customers?
We do, but what we've done with our customers is that we're going to allow them to have the moment. We're going to be rolling both this and our next generation drone out in the next quarter. We're going to be in some top retailers, top convenience, and top quick service restaurants. I'd say stand by for the announcement. We're going to allow them to make those announcements because we believe it's a big leap forward for them and an opportunity to utilize our technology. But it's coming next quarter.
Okay, well, Tom, I'm sure our Bloomberg Technology audience wouldn't mind you sharing with us those names, particularly on the QSR side. So give me a sense of how quickly you can scale this. You know, I've done a lot in Arkansas, for example, about what Walmart was doing with Zipline in the last mile context, but that is a small scale pilot, and they often are small scale pilots. Convince me and our audience that this can be real in the real world at scale.
Yeah, so our technology is integrated from our airspace management that manages the airspace to the ground infrastructure that auto loads. Powered behind it is a very sophisticated logistics system that ensures we get the package you want, when you want it, and where you want it. Each of these units, this DBX technology that we created, is like an Internet of Things. All it requires is power. So you set it in, it's smaller than a parking space, it powers on, and within 15 minutes, it's part of the ecosystem. And so drones move throughout the ecosystem autonomously and are able to heat surge demands here and decrease demands in other areas. Again, 74% of the cost and labor of drone operations or drone delivery operations is labor. This system essentially eliminates that labor, both on the pickup side and the delivery side. And so if you're going to bring those costs down, you have to start by eliminating labor. And remember, this configuration you're seeing here is just one. It could be on a roof. It could be integrated with a fulfillment system. It will scale very, very quickly because it creates a more affordable approach.
All right, Drone Up CEO Tom Walker, come back when you're ready to announce those customers. Thank you. Now, coming up on Bloomberg Technology, Starlink's effectiveness as a comms tool is making the satellite internet service a target for a growing black market trade. We bring you the Bloomberg Big Take and some key reporting. This is Bloomberg. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. Today's Bloomberg Big Take. Elon Musk Starlink's terminals have hit the black market. A Bloomberg News investigation has identified wide-spanning examples of Starlink kits being traded and activated illegally in countries all around the world. Here with more on the story is Bloomberg's space editor, Eric Johnson. The Big Take and the investigation identifies a number of countries, many of them areas of conflict where this is happening. Illegally obtained Starlink ground receiver being activated. Bring us the details.
Yeah, absolutely. Starlink's growth around the world has made it, an invaluable resource for, regular people, myself and others who just need high-speed internet. But it's also because of how easy it is to use and its widespread availability has, fallen into the hands of in war-torn regions where there's no operations agreement between the company Starlink and the government there, and also in places that are under U.S. sanctions, such as Venezuela and other nations.
Eric, I want to point out to our audience that SpaceX did not respond to our requests for comment on the story, and of course they were invited to comment and to discuss it. They did say back in February that were they to obtain any knowledge that a Starlink terminal was being used by a sanctioned or unauthorized party, that they'd investigate the claim and then take actions to deactivate that terminal. In our reporting, do we have a sense of how pervasive this is, the scale at which the illegal use is happening from a numbers perspective, or is it limited to specific case studies in those countries?
I mean, that was one of the most fascinating revelations for us, is just how widespread this is. I mean, it's being used all around the world. And, Starlink and SpaceX and Musk, have said at various times that they will, when a case is brought to their attention, they will investigate it. And if confirmed, they will shut down. They can, we've talked to experts who said they can use geolocating, whenever one of these terminals is activated, they can literally see it. And so they, in theory, could turn it off. It raises questions about, how effective they are at this, where, Musk is this mercurial figure. His allegiances are hard to ascertain, and certainly it raises questions about who has the power to do this and what authorities are going to get involved, whether that's the U.S. government, whether that's local authorities on the ground in these places, such as Yemen, Sudan, Venezuela. There's been unconfirmed reports of soldiers in Russia using it, which of course is under U.S. sanctions. Yes. So, but to your point, this is a widespread problem, and it makes Starlink into this geopolitical wild card that with very uncertain use around the world.
But it's also becoming an increasingly important part of the SpaceX business model, right? I've done some reporting, which you've edited over the last year or so, about the growth of the Starlink business. Just outline its goals and where the growth kind of lays right now for space-based or satellite constellation-based internet.
Starlink is absolutely vital to Elon Musk's business plan. It's going to be a huge percentage of SpaceX's revenue. Musk has said that the launch business itself is capped, but he envisioned Starlink could be a $30 billion a year business. The point of it initially was to, have sort of financial underpinnings and growth to help Musk achieve his lifelong dream of getting to Mars with the Starship rocket, so a crucial funding source for the company, and its growth has mirrored that.
Bloomberg's Eric Johnson, our space editor. Thank you so much for sharing with us the Bloomberg Big Take. Let's get back to the breaking news that we've been covering all morning. We want to head now out to Washington for the latest update on the search and rescue mission that's underway in Baltimore after the Francis Scott Key Bridge collapsed earlier this morning after a cargo ship struck what is a major transportation route. You're looking at live pictures of the Francis Scott Key Bridge, and you're looking at live pictures of that vessel registered in Singapore. Bloomberg's Wendy Benjaminson joins us from DC. What do we know of the search and rescue mission and the U.S. government response? Wendy?
Well, we do know here in Washington that President Biden has been briefed on this and that he is expected to speak in this hour about the rescue efforts and the federal resources that the White House says they are sending to Baltimore and to Maryland to try to help, get this port open again and find any people that might be stuck in the water or elsewhere. Transportation Secretary Pete Buttigieg, I believe, is going to also come to the area to inspect and see what's going on. But this is, as you say, just a major disruption, even if, thank goodness, there seems to be a small loss of life.
Yeah, and our thoughts are with those impacted. I know that the search and rescue effort is underway. Maryland's governor seemed to suggest earlier in media interviews that this was an accident, but this is an important port in the context, particularly of the automotive industry. Is there any sense of the impact, how long this will be disruptive?
Well, there are estimates out there that it could last months, which seems to make sense. If you see from those videos, this was a massive bridge that just broke apart into the Chesapeake Bay there. It is going to be a tremendous impact. There are 21 ships already waiting on the inland side of that bridge that were waiting to go out. There are distribution warehouses on the north end of that bridge for companies such as Amazon, FedEx, Under Armour, Home Depot. I mean, major, companies that people order things from and need to get out. Also, trucks use that bridge if they were carrying any hazardous cargo whatsoever, because they can't go in the tunnel that exists under that bay that you're seeing there. So there are those trucks. I don't know if they're going to have to let them get them through the tunnel, which risks obviously further accidents. So this is going to take months, certainly days, just even to sort out the scope of the problem.
And we continue to bring you those live pictures and the key updates from the Francis Scott Key Bridge, which collapsed earlier this morning. Bloomberg's Wendy Benjaminson, thank you for your reporting. Sunshine, a startup that helps users automate mundane tasks, launching a new AI product called Shine. The product includes 2 complementary features for users, a photo sharing app and an events website that can be used together or individually. CEO and co-founder Marissa joins us now with the details. And there is an AI story here that the platform and technology is able to tell a user, this photo is share-worthy. But how does an AI know what is or what is not share-worthy in terms of a photo that I might post?
Well, as you know, the current state of AI is really very useful and very advanced. And so we can look at your photos. We can look at things like where they were taken, when they were taken, who you were with, or who's in the photos, what's in the photos, how many times did you take that photo. And that all of those signals tell us when you might want to share it with someone else.
Marissa, you've been in the technology industry a long time and you've built companies. Did you decide to build the underlying model for this yourselves, or did you work with a third party using either LLMs or other machine learning technology from a partner?
We do use some of our own technology, but we also rely on incredible APIs provided by some of the large players in the space.
What I find interesting about Shine is who the target audience is. You know, we talk a lot on this program, Bloomberg Technology, about the creator environment, creator industry. Is that who principally you have in mind, or are you targeting a much broader audience of user who may just want to share photos with family or friends or whatever it may be?
Well, the reality is that photo sharing is really broken, and it's broken for everyone. It's broken for creators and all consumers. And so we really are focused on how do we help people remember to share the photo, remember to get the photo, and just make it easier to do that. And also we are working with people who throw events and put things together in terms of organizing parties, trips, etc. And so our shine.sunshine.com allows you to do invited, more formal events, but the app Shine works for everything. Road trips, parties, just simple hangouts.
That brings us to the event portion of this that we spoke about in the intro. So I have the ability to run my photos through the AI and it will tell me what I want to share. Now explain the event portion to me and how they work hand in hand.
Sure. Well, the photos portion essentially assembles albums, and those albums are based around events. They might be informal events, but they can also be formal events, because we know that some of the most important photos for people are taken at formal events, weddings, parties, conferences. And so our website offers that kind of event organization. So it allows you to create stunning invitations. We use generative AI to do this. We have fast and fluid communication, so RSVPs, as well as different updates and messaging between hosts and guests is easy. And the way these work together is that the photo sharing is built in from the beginning. And what that means is once you've RSVP'd to an event, you're already joined to that shared album. So if you have the Shine app, it's very easy for you to contribute your photos to that event, as well as get photos from other attendees.
Marissa, you are building an AI company and launching an AI product at a time where we're just micro-focused on AI as an industry. In November, you were very open and very critical about what happened with OpenAI and the then structure of the board on social media, for example. This is the first chance we've had to talk since then. What's your assessment as a long-standing member of the technology industry of the resolution OpenAI reached, the makeup of its board, its promise to grow the board?
I think that overall it's been a great step forward. I think I became very concerned just about the overall governance model. And because this is a fast-moving industry and there are so many people very focused on it, I think it's really important that the major players are governed well. But I think that the new board that they've assembled is excellent. And I think that it seems to be very promising in terms of the direction it's going.
There were reports at the time, Marissa, that you had been approached or sounded out to be a member of OpenAI's board. Was that the case, and would you be interested in joining that board?
I already serve on a few boards that I'm very excited about, Walmart and AT&T. And, in my day-to-day, I'm very focused on Shine. So I'm obviously very interested in AI, but nothing to report there.
All right, Sunshine co-founder and CEO Marissa Mayer talking to us about Shine. We're grateful for your time on the program. Thank you. Florida Governor Ron DeSantis has signed a law that will keep kids under 14 off of social media and require parental permission for those up to age 16. The law, which will take effect January 1st, overhauls an earlier proposal that would have prohibited youth under 16 from holding social media accounts full stop, a measure DeSantis vetoed, saying it wouldn't give parents enough control over decisions about their children. Okay, you probably know who Dwayne The Rock Johnson is, but do you know about the woman behind his popular brands, including the likes of Terramana, Zoa Energy, production company 7 Bucks Productions, many more? She also played a key role in the merger between XFL and USFL that resulted in Professional American Football Minor League, backed by Redbird and Fox UFL, to become the first female sports league owner. Delighted to say that joining us now is the woman behind it all, Dany Garcia, chairwoman of the Garcia companies. It's an interesting way to introduce someone. I actually would ask that you introduce yourself. Tell me, who is Dany Garcia to those that don't know you?
Oh my goodness, I don't know, Ed, you covered it so well. I would say Dany Garcia, chairwoman of the Garcia companies, and I am fortunate enough to be an entrepreneur, a CEO, a founder, a co-owner of an incredible sports league, and I think the overarching thing is I consider myself an athlete of life, which allows me to go to many, many different places and do many things very powerfully.
One of the reasons that I wanted you to come on the program is, we are familiar with Dwayne The Rock Johnson. I've covered WWE. We know him as a movie star. But actually, increasingly, people become familiar with him through his use of social media. And actually, my knowledge of Terramana, for example, or the skincare range that he now has is because he's very active on social media. What role do you play in that strategy in making sure that each of the companies are out there on the socials?
Well, first of all, Dwayne and social media are synonymous. My role is I oversee how the brands are showing up and how they're connecting with the consumers, how they're connecting with the audience, and how they're connecting and truly reflecting the ethos of who DJ is. Social media is always one of our important media outlets. Dwayne is very involved and very direct on how he shows up and what that tone is. And I make sure that it's aligned to the companies and also aligned to all of the other companies in the portfolio. So there's lots of interconnectivity. My goal is to make sure that the strategy is working and it's holistic.
Would it be fair to say that Dwayne would not have had the success he's had and you would not have had the success you had without social media?
I would say it's very, very fair. I mean, Dwayne's affinity towards social media right at the beginning of its, right in the initial parts where he really, really doubled down, allowed him to reach a global audience and speak to them directly. So he has a very transparent relationship, and that's why his accounts continue to grow and grow and grow. But it absolutely has had a massive impact on reach, and most importantly, on connectivity.
Dany, you are the first female sports league owner, and I wanted to spend some time on that. I guess that if you look at XFL and USFL, that marriage wouldn't have happened if everything was completely rosy. There must have been some underlying issues. Just give me the backstory of how that came about in your role.
Oh, no, absolutely. Well, I think it's when people ask about that, if you're starting a spring league, you want to take a look and say, okay, where are leverage points? How can I accelerate what I'm doing? And the XFL, which we launched, obviously, we had our first season last year. The USFL was having their second season. We met all our markers. We were very, very successful and happy with our reach and our engagement, the way our athletes were playing. And simultaneously, the USFL was making great grounds, right? This is their second time out. But our interests and the ability to say, okay, what happens when we leverage these powerhouses of ownership? Because we're talking Fox, Disney, ESPN, myself, Dwayne Johnson, Redbird Capital, all of a sudden became very clear we could do so much more.
Dany, this is Bloomberg Technology, and so we go straight to the streaming part of this business.
Yeah.
You know, there's a traditional broadcast component, but I wonder of which you're most excited.
As far as, for all of, which portion of our distribution?
Yeah, growing an audience distribution. You know, it's going to be an interesting experiment.
Well, absolutely. So I'm excited. Well, I would have to say, if you look back, obviously, at our history, I'm very excited about how the UFL, not only with our traditional broadcast partners, which is fantastic, but how we're embracing it and bringing our content and creating content specifically for a digital platform, whether it's social media, through YouTube, etc. It allows us to really deeply connect with our audience, listen to them, engage, and be very, very innovative and nimble there. We do a tremendous amount of our storytelling at that. That's where we get very, very granular, and that helps us to grow our audience in our new markets. So it's very important.
Dany, what's next? How much capital do you have to play with to go into a new industry? You know, I won't list them, we don't have time, but alcohol, salt and straw, skincare, sports, production. What is the next frontier that you want to move into?
Well, you know what? I continue to be really, and I'll speak for myself personally, I continue to be extremely focused and excited about sports. I'm excited about sports in general, women's sports in general. There is that's something that I'm doing quite a bit of research on and see myself leaning heavily in that area.
Okay, tell me about the company. At least give me a sense of what industry the company's in.
Which industry the company will be in? Well, no, the company is going to be in sports. The industry is going to be sports. Do you want to get particular, like which sports? Because I won't share that just yet. But I would give you this example. The 360 approach that we have brought to the UFL, the way we're approaching that, would be a blueprint to how I look at my other investments that will happen in sports. In addition, we'll continue to grow $7 production and expand that media slate and our distribution ability there. That's extremely exciting. So I would say the emphasis you would see, entertainment, sports, that really feels where I'm looking.
The Garcia company's CEO, Dany Garcia. Thank you for being so generous with your time on the show. A pretty wide-ranging conversation. Good to have you on. That does it for this edition of Bloomberg Technology. We are 2 days into a very busy week. There is a lot happening in the news flow. Recap everything that we've discussed on the podcast. So many of you do listen to the show in podcast format wherever you like to stream. Apple, Spotify, iHeart. And of course, we're publishing the podcast to all the Bloomberg platforms as well. And again, whether it's on LinkedIn or on X or on Instagram, really appreciate all the feedback that you're giving to us in real time. Continuing to monitor what's happening in Baltimore, continuing to look at the markets. And as always, we are focused on what's happening here in San Francisco, New York, and beyond in the world of technology. This is Bloomberg Technology.